Let's go take a look at the latest market updates. And what I'm going to do is every month in the beginning of this weekly show, I'm going to go over the monthly updates so that you can see exactly how are things trending, and if it may be impacting yourself. Of course, if you want to have a private dialogue about your situation, about what the game plan should be and my forecast, feel free to reach out anytime, as my contact details are below, 408-547-4590. But let's take a look at the data of the week, or the data, sorry, of the month. So we take a look at Santa Clara County, single family condos, townhomes, residential, sales price, medium. We're going to see some of these figures here. So you can see prices have actually declined quite a bit from the highs of April and May. From an April and May, April was the highest time in least of this period of those segments combined at $1.61 million. And you can see as we wrapped up July, it dropped by to 1.449. That is the equivalent of a difference of about 10%. 161,000, yeah, really equivalent of exactly 10%. So home prices have actually declined by 10% already for the sales of median prices, which is actually fairly interesting. In my opinion, actually, things are much worse than this, because right now only the good homes are actually transacting. And why do I say this? Take a look at the number of homes that are actually transacting. The sales volume. Let's take a look at this together. Right, the volume of July of 2022 is significantly less than in June and May, which is normal of seasons, at 983. But if I take a look at the past 3 years, you can see the general overall trend, right? 983 from 1796, 2020, 1468, and even pre-COVID is about a good amount less, so 20%, 30% less than that. So the transaction volume is actually down a lot more. So what does that mean? It means combination. The buyer demand is much less. At the same time, it's really only those nice properties that are selling. That's why you do see the days on market continue to increase. So take a look at this. The days to sell for the median is right now 14 days, which is higher than, as you can see, for quite some time, right? You can see really the last time we had these kind of high numbers was in the winter timeframes of July 2019 to 2020, or as it was 3 years ago. So it is more normalizing for the days to sell. Now, the other question people will ultimately ask now is also how many new homes are actually coming on the market now? So take a look at this, because this is an interesting stat. 1,580 homes came on the market in July. Now, this is much less than the previous 2 Julys, right? Significantly less, 25% less than in 2021. In 2020, it's even less than that. And now it's similar to what it was pre-COVID. So some really interesting stats, right? Because at the same time, buyer demand is less. Sellers actually listing it is less. And so we're seeing a little bit less homes that come on the market. And we see, buyer demand kind of slow down too in terms of how aggressive they are. And we're seeing price reductions happening across the board. But let's see, are all markets in the Bay Area experiencing the same kind of impact? This was Santa Clara County. So you can see the trends there. Let's take a look at San Mateo County. So you can see if there's been any impact there. You can see April was very similar to them. Right, that was the highest point, 1.775 million. July now is 1.5. That's a $275,000 difference. So that's more than 10%, as you can see. Take a look at the next numbers. Let's look at Alameda County. Look at Alameda County, home to the East Bay. Let's look at prices. May was actually their highest point at 1,255, and then it's dropped to 1,135. So that's a 90,000 drop. So it's a little bit less than 10%. So that'd be like 8% or so. Let's take a look at some other places. Maybe San Francisco. Take a look at San Francisco. What's been going on in San Francisco? San Francisco, as you can see, has been relatively flatter. It didn't have as much of the increase as you can see versus others, but a little bit flatter. Highest point was April 2022, 1.61 million. Now it's at 1.475. That's 140,000 gap. So also less than 10%, about 8%. And let's look at the last place. Let's take a look at Contra Costa County. What's going on in Contra Costa County? Contra Costa County, you can see same everywhere. As you can see, same highest point was April 2022, 905,000, and it declined to 849. So that's 60 something thousand. So this is actually, out of all those areas that we brought up, this had decreased the least, right? This is about 7-8%. So this actually decreased the least. So San Mateo County had decreased the most, and Contra Costa had decreased the least. So some just really interesting stats. Let's just take a look at this out of curiosity. Days to sell, the median. You can see it's similar to the others. It's just 13 days for the days to sell on medium. So that's kind of gives you a little bit of an idea about what is actually happening with the actual Bay Area market statistics in the data. Home prices have actually declined quite a bit. And the other thing that people aren't familiar with is we all heard about mortgage rates, the Fed fund rates actually increasing. But if you look at this, it was all baked in already. So you can see actually interest rates have actually declined quite a bit. So a lot of people think just because the Fed fund rate has increased means that all of a sudden mortgage rates will increase, but that's not the case. June 23 was the highest point at 5.81%. You can see what it is now. It's already declined less than 5% and it's trending favorable. So a lot of people that have not been actively tracking the market, really each week, each month, is now going to be able to see this, that there's a lot of positive catalysts for a lot of the buyers out there, right? You have prices declining pretty quickly, but you see actually some mortgage relief, right? You see mortgages actually drop already. So I do see, and my prediction right now is I do see probably a decent amount of activity will likely take place again on the buyer side. I would say September. And the reason for that is several. A lot of people are going to be traveling and back from vacation. How many of you guys have went to Europe this summer? How many of you guys know somebody that's going to Europe this summer? Leave it in the comments below if you know of anyone that's going to Europe or is in Europe as we speak. Especially, you should be leveraging the euro parity, euro to US dollar parity, which is crazy. Imagine all the dining you can do. Imagine all the wine you can drink. Imagine all the luxury goods you can buy at this kind of valuation. That is phenomenal. So a lot of people are traveling to Europe, especially because of they haven't been able to do that last year, right? Last year, if you think about it, a lot of people were just traveling when it came to domestic travel because international was not opened up, but international is opened up now. So we're going to see, we have seen a lot of that, and we'll likely continue to see a lot of that moving forward. Thank you for watching this short on my YouTube channel. For more shorts, go ahead and click here. For more live streams, you can go ahead and click here. I'll see you in the next one.